Hey guys, I hope everyone is doing well. I just wanted to make a video on how I learned to day trade. So without further ado, let's just get started. There are two ways you can sell a stock market. It's either through a technical analysis or fundamentals. I, like most day traders, am a technical trader. I follow certain patterns and setups to make my entries and exits when day trading. And the very most important thing in day trading, at least when it comes to my strategy, is to buy low, sell high. Buy low, sell high. Unless, of course, you're shorting, which is the other way around. I know you're thinking, well, duh, and rightfully so. I sound stupid preaching that, but I promise you, because of emotionality, people will break this rule. I know because I did it multiple times when I started. FOMO, which is fear of missing out, is a real thing, and people will jump into a stock thinking they can ride the wave when that wave has already passed. And that's why I have to be so persistent in saying buy low, sell high. Uh, when you're buying low, can it go lower? Yes, it can, but at least your risk is significantly lower relative to if you were buying up top, which brings me to my next point in day trading, and perhaps the most important. Always try to buy at support and not resistance, and uh, that's important for many reasons. So, what is support and resistance? They're basically predetermined levels of a stock within a chart in which that stock is expected to bounce off of and reverse. So let's take a look at YUMA from a couple of days ago as an example. I mostly trade small cap stocks between $1 to $15, and the very first thing I do is open up my scanner to see which stocks are gapping up pre-market. Um, and so this is my scanner right here. Basically, I have my price put in between $1 to $15. I look for a volume of at least 50,000, and I'll get to volume in a second. And the last thing I do is make sure that these are stocks less than 50 million in outstanding shares, um, and especially for small cap stocks. And the reason why I do that is obviously, if there's high demand and low supply, that means there's going to be a higher move in price action. And so basically, here are where all the stocks that I have under my criteria would show up. And on this particular day, from 3 days ago, YUMA showed up. And it was gapping up about 180% pre market, which is very good. That's what you like to see, especially for a small price stock. And obviously, because the volume was high, uh, that was another factor that played into it. So going back to support and resistance, what I do first before anything else is look at the daily chart. I use three charts. I use my daily chart, I use a 3 minute chart, and I use a 1 minute chart. So just a total of three charts. And when I'm looking at my daily chart, I really try to determine exactly where a stock is bouncing and where it's stopping. Um, and so this is the particular day that I was referring to when I decided to trade it. So if we just cover the last 3 days, um, the stock was gapping up like right around here, pre-market. So certain resistance and support is going to come into play around this area. So you want to sort of draw out support and resistance anywhere near the price where the current price action is for this stock. So obviously this is a clear support point because of the amount of times the stock is bouncing off of it. So the low was 272. I marked that price, and it clearly shows the bounce that the stock is making. Same thing here up top. The stock stopped at 408, which was the high of this candlestick. And so you would just draw out a line for resistance right here. And then what else I do is I go back from the past 10 years, actually. That's how vigorous I am with support and resistance, because they're so crucial to day trading. I go back 10 years to see where else I could find support and resistance around that current price action of the pre-market high for that day. And, let me just extend this to the very back. Yeah. Well, by the way, I forgot to mention what else I like to do is extend this to the left, And the reason why I do that is sometimes you can notice stocks bouncing off historically of these resistance and support points, because one thing you'll learn is resistance and support could apply to any level from the past. Those levels are well respected from a historical perspective. And so going back, I try to find the nearest level of support and resistance around the current price action that the stock is trading at pre-market. So I like to think that this would be a good resistance point, because it's around, let's see, high is 317. So I'll draw a line here around 317, and the reason I want to do that again because it's within the vicinity of where the current price action is pre-market for this particular day. So let's go even further back. All right, so we have a couple of support lines right here on this day of July 2015. The low was $6. And another thing that I should also mention is there's also psychological resistance in whole dollars and half dollars. Sometimes there's a point of confluence between whole dollars and half dollars and where that stock bounces. So that makes the support and resistance even more validated. You can also see here the stock bounced, and the low here was 484. So we'll draw it out here. All right. And I think I got them for the most part. There's also a resistance point right here. High was 670, so we'll draw one right here. And so I feel pretty good about my support and resistance on the daily chart. And now if we go back to the current day of when the stock was gapping up. Sorry, let me just zoom out a little further. All right. So once I have my support and resistance drawn out on the daily chart, I go back to my 1-minute chart and 3-minute chart. And as you can see, the support and resistance that I drew out on my daily chart has now shown up on my 3-minute and 1-minute chart. And that's very important going forward. So before the bell rang at 9:30 a.m., let me try to actually extend this further back. Let's go 4 days. So that's basically how the chart was looking pre-market, and the bell rang at 9:30 a.m. and usually that first candlestick it tends to be the most volatile with the most volume, and I tend to not trade it because I really want to try to figure out exactly where the trend is going. So what I do is I just let everything play out and just wait for certain support and resistance to be tested. And so as we could see here, this is pretty close to the support level that we saw a quick bounce off of it. And that's a good 30-cent move where you could have bought X amount of shares to make a good profit. And then obviously the next candlestick, if you ever see the stock go below the previous candlestick low, then there's a good chance where it's going to go even lower, and then you obviously have to watch out for it to break support. And that's when you want to really get out of the way. And here's another key support level that we drew out on our daily chart at 272, and it bounced off that to a T, and then it started reversing, and it kept going up until eventually it broke this resistance of 410. And so when you break resistance, that becomes new support, and you could see that clearly validated with these 1-minute candlesticks struggling to go below it. It's staying up, so that's a very good validation of support. And then as it goes higher, it it's going to touch the next level of resistance, which is right here at 485, and again that touched it to the T as well too. And this is why support and resistance are very, very important. In addition to volume, volume is the number of shares that are being traded at that given moment. People are either buying or selling shares, and obviously you want a high amount of volume to push that stock further. And then obviously you want to make sure it's gapping up pre-market on movement. Movement could be because of earnings reports, some kind of news, but it's very important to see a good percentage move up or down, like I said, if you're trying to short the stock. So those are the three most important things. It's support, resistance, volume, and movement when it comes to day trading. And basically I like to get in and out of my position as quickly as possible, because with day trading, obviously, you know, there's not really it's different from investing, because you know you just want to make your quick buck, so you don't necessarily care about the fundamentals. You're just looking at that technical setup and you want to try to get your profit where you can. So what these lines that you see here are, you know, moving average indicators. Those are very important because they're based on past price action, and is basically a good way to measure if whether a trend is going up or down based on if that current bar stick is below or above that moving average. This dotted line right here is the VWAP, and that's just the average price of a stock that's traded throughout the day, which also helps determine the trend of a stock. So those are all key levels, I would say, when it comes to day trading. You also have your time in sales right here, which is the number of transactions that are coming through. If it's green, those are buys. If it's red, those are sells. This is a level 2, which is a market depth. You could foresee past the current you know, selling price and buying price, which could be very help determine the trend of a stock before it actually happens. And that's a good way to measure whether you want to make an entry or exit of your position. And obviously this is the scanners that I use to see exactly which stocks are moving throughout the day. But that's just a basically quick snap of how day trading works. You know, again, it's very important that you try to buy into support and sell through resistance. What I like to do is I buy a good amount of shares in support, sell half for a quick win, and then try to see the other half ride out. If it's holding, if it breaks resistance and it's holding resistance, which is now support, there's a good chance that it will go higher, and that's exactly what it did here. So definitely thank you for watching my video. I'll definitely have more details and tutorials on day trading going forward. I really hope you guys enjoyed it, and definitely, you know, got something out of it. Again, there's a lot of things that go into day trading. The biggest thing that you'll know is that, you know, you can watch a lot of videos, you can read a lot of books, and they're very helpful, but your biggest teacher will be through practical experience. And then basically that's what my biggest learning curve was just learning through my mistakes, through practical experience, from trial and error. And you know, it's like riding a bicycle. I know it sounds cliche. I said this in one of my earlier videos. You know, once you learn, you know, you're just gonna get better from there. You know, that goes with anything. You know, whether it's learning to play a guitar, the piano, any skill set. You're just gonna get better at it over time. You'll start recognizing certain patterns right away, because you know, it's becoming embedded in your brain. You know, you just get so used to it looking at these setups every day, and yeah, you're just going to get better with experience. So thank you again for watching. If you don't mind, if you enjoy this video, please go ahead and hit that like button, subscribe as well. I definitely plan on making videos consistently. And if there's any other questions you guys have, please leave in the comments below. Any recommendations as far as future videos you want me to make, please feel free to go ahead and do that. But yeah, other than that, definitely have a great day, and take care. Bye.